Welcome back. Futures this morning, a mix. Take a look. The Dow Industrial's up 45, and that's all due to a big gain in United Healthcare this morning. The Nasdaq is leading markets lower with a decline of 280 as big tech rolls over once again. The Nasdaq down about 1%. Of course, investors have been rotating out of semiconductors after a brief two-day rebound. And this morning, we've got a mixed showing for tech, but semiconductors are largely lower and selling off again. In fact, as you can see, Micron down 5% right now. SpaceX is trading below its IPO price for the first time. Yesterday, it slipped to just above $132 a share in midday trading. This morning, it is at $134 and change. Of course, this company went public at $135. Competitor Anthropic set to meet with investors as it prepares for an IPO later in the year, probably October, ahead of OpenAI's planned IPO as well. Joining me now is Navellier and Associates founder and chief investment officer, Louis Navellier. Louis, great to see you. Thank you so much for being here. How do you want to allocate capital when you see tech rolling over a bit here? You're a growth investor. What are you doing?
Well, I like all these tech stocks with great earnings that get spanked temporarily. Look at Taiwan Semi today. It beat everywhere, guided higher. It's going to open lower, but I think it's a great buy on this dip. The memory stocks obviously are very volatile, but that memory shortage is acute. They're good buys on dips. I'm keenly aware that Energies has the strongest earnings this quarter, but the AI and data center related stocks aren't too far behind. So it's going to be a great quarter, and it should be better than last quarter. I just wrote an op-ed piece in MarketWatch essentially saying we're still in an accelerating earnings environment.
Yeah, and you've been talking about a strong backdrop for earnings for a long time. We saw that in the first quarter. And so far, the second quarter kicks off in a strong way with those better than expected numbers from the major banks. What is your expectation for earnings and revenue growth this quarter, second quarter?
Well, the official forecasts are about 22% for the S&P, but believe it or not, we'll cross over 30.
Wow.
And that's slightly stronger than last quarter.
That is a great number. Interest rates this morning are spiking once again. And I want to get your take on that. I mean, we're all talking about the fact that we're not expecting Warsh to do anything on rates. Of course, Kevin Warsh testified before the Senate Banking Committee yesterday after the June CPI and PPI numbers came out much better than expected, lower than estimated. And yet the 10-year yield is up 3.7 basis points this morning. Warsh said the declining inflationary numbers are not enough for sweeping change at the central bank. Watch this.
In the last couple of days, we've gotten data on consumer price index, on the producer price index. Any central bank would be happy to have the data going in the right direction. My view is these are all imperfect measures of the state of underlying inflation.
Louis, your reaction to Warsh's testimony this week?
Well, first of all, we're very fortunate to have Kevin Warsh as our new Fed chairman. He is redoing the Fed from the bottom up. He has those 5 task forces, and he's really trying to dig into the catalyst behind inflation. He wants to lead versus overreact. But, the big issue on interest rates is the yield curve is tilted up a bit. And so I watch that 2-year quite a bit. So we do not want the yield curve to get inverted. The rate cuts are still on hold until market rates come down. And Kevin Warsh has made it very clear that he's going to let the market rates and dictate what the Fed does. So we have stable rates. We're not going to get a rate hike. That's the good news from all those positive inflation reports. But I like Kevin Warsh. I think we'll see his changes in the Beige Book surveys and all the Fed reports, because he's trying to change the Fed from the bottom up and really change the mindset. In the meantime, he's working with his colleagues to build consensus.
Yeah, and yet oil prices are back up. President Trump revealing that Iranian officials called him and said they want to make a deal and that the conflict will soon come to an end. And yet the price of oil right now at $80.61 a barrel. Would you be poised to buy oil companies? In the past, we've talked about gold companies. You like the gold miners. Tell me where you want to put your money away from tech.
Well, I still love materials, something like our Carpenter Technology. So it's aerospace, metals company. I do have a fair amount of aerospace stocks as well. But the main thing with energy is there's an acute refinery shortage, so the profits are up immensely with the refiners. So I do own refiners. I do have a lot of oil tanker companies. The U.S. did fire on an Iranian tanker that was ignoring its orders. It was trying to load up on Karg Island. So that's keeping prices elevated. And I still have a lot of midstream and pipeline companies as well. Now, some of those are dividend plays, but the energy patch is extremely healthy. I do own a lot of Canadian energy. The U.S. energy stocks, believe it or not, the big integrated ones are slightly more volatile. And so I load up on the Canadian ones. But yeah, no, there's a lot of good places to invest. But the three sectors that are going to beat the S&P's earnings are energy, information tech and semis, and then, of course, materials.
Yeah,
I hope a fourth sector appears, and United Health helped a lot.
Yeah, United Health is helping the Dow this morning, but we're seeing some pressure, which is taking it off of the highs. Would you want to avoid anything right here, Louis? We're waiting on the retail sales numbers here. We'll get those momentarily. And of course, we'll find out how the consumer is doing.
Well, I really hope that, I get some retailers, it's just they're out of fashion now, even though we've seen phenomenal retail sales, and I expect a big beat here in a few minutes. So, but I do, the breadth and power of the market's expanding. We're in the summer months. It's just a little bit manic. And I haven't given up on my gold bet, by the way, but I have cut the allocation. I'm down to 16 gold stocks right now.
I see. And in terms of other alternatives to straightaway equities, is there any exposure elsewhere?
Not really. I'm a stock guy. I go in earnings season locked and loaded, and I count on those earnings to drop kick and drive the stocks higher. You're seeing a lot of stocks that are appreciating before the earnings, and that's a good sign. That's from positive analyst revisions.
Your thoughts, Mark Tepper, jump in here.
Yeah, I mean, I like stocks as well. One of the things Louis mentioned is potentially 30% earnings growth this quarter, which would be remarkable. But if you think about it, you can't do it without companies like NVIDIA pulling their weight, and that's obviously a big component.
Let's get the retail sales and jobless claims hitting the tape right now. Cheryl Casoni with the numbers. Cheryl.
So it came in line month to month with a gain of 0.2% on retail sales for the month of June. As for ex-autos, we actually had a decline of 0.2%. The street was only looking for a decline of 0.1%. As far as core retail sales, big focus on this because you're stripping out gasoline out of this one, and gas sales actually fell, of course, as we know, in the month of June. That came in line, a gain of 0.5%, 0.5% there. Claims coming in better than expected. We still have a good job market, guys. 208,000 is the initial read. The street was looking for 217, and then we came in better than expected on continuing, 1.805 million. 6.7% year over year is a very strong number if you want to talk about the consumer, and Louis was mentioning that. 6.7 year over year. We don't get an estimate for that. But also, really quick, Maria, I'll send it back to you. July Philly Fed came in at 41.4. The estimate was 13. We had really good manufacturing, the Empire State read yesterday. So I think that's really something to watch. Those were very strong economic numbers that we got as well. So in line here, basically, just I'll send it back there. We had summer promotions. You got World Cup. And you had Prime Day for that hit June. So all of that kind of fed into this number.
All right. The markets are mixed today. What's hurting the Dow so much, Mark Tepper? Because the Dow earlier had been up a lot more, and then we see this huge rally in United Healthcare. That's one of the components here that's keeping in positive territory.
Yeah, that's interesting. I don't know off the top of my head what's going on there, but one of the big topics that we've been looking at is just the sell-off in semiconductors over the course of the last month or so. But at the same point in time, you have companies like NVIDIA, which I was mentioning prior to the numbers coming out, which have been laggards in the semiconductor index year to date that are all of a sudden starting to look alive again. And, when we talk about earnings growth, expectations, all that stuff, and valuations, NVIDIA, believe it or not, trades at a lower valuation than the broader S&P 500.
Yeah, that's
21
incredible.
times forward earnings while growing earnings at a long-term growth rate of 58%. I mean, that is just remarkable, especially when you consider investors like to pay for growth.
Yeah, but you know what, Louis? A lot of people are equating the future stock market performance to all this spending in AI. And that's one of the things holding things up. Kevin Hassett is expecting 4% economic growth second half of the year. Is that where you are?
Yeah, here's the only drag. Our imports from Korea, Taiwan, for all the memory and GPUs, is making the trade deficit a little wider, and that results in a cut to GDP growth. So it looks like the trade deficit's going to cut GDP 1.7 in the second quarter, and may cut it up to 2% in the third quarter. But if we could just narrow that trade deficit a bit with all our energy exports and stuff, yeah, we would come close to my 5% target. But Kevin Hassett's a really smart guy, and I'll take 4%.
All right, we will leave it there. Louis, always a pleasure.